There are different types of LCs or letter of credit like revolving LC, revocable LC, irrevocable LC, standby LC, confirmed LC, back to back LC, red clause LC, green clause LC. Today, our topic is about the deferred LC. We will discuss about the process of deferred LC, advantages, its disadvantages, and its uses or applications. Deferred LC, a deferred letter of credit, is a type of letter of credit where the payment to the beneficiary, usually the exporter, is made after the specific period following the shipment of goods or presentation of complaint documents. It allows the buyer to defer the payment for an agreed period while ensuring the seller gets guarantee of payment from the bank. What is the process of deferred LC? Deferred LC, issuance of LC, the buyer or applicant requests their bank, issuing bank to issue the deferred LC in favor of seller. The terms include the deferred LC payment period may be 30, 60, or 90 days after the shipment or document submissions. Second is shipment of goods. The seller ships the goods as per agreement and collect the shipping and other required documents. Presentation of documents. The seller submits the required documents to their bank, advising or negotiating bank. Fourth process is document verification. The advising bank forward the documents to the issuing bank, which verifies the compliance with the LC terms. The fifth step of this process is acceptance of payment obligations. Upon document verification, the issuing bank confirms its obligation to pay on the deferred due date. The last process is deferred payment. Payment is made to seller after the agreed period. It may be 30, 60, 90, or any other figure, ensuring both party meets the agreed terms. So this is the process of deferred LC. What are the advantages of deferred LC? When we discuss about the advantages, there are different advantages for buyer and different advantages for seller. In case of buyer, extended payment terms allows buyer to defer the payment, improving the cash flow management and risk mitigation, ensures goods are shipped before the payment is required. The third advantages for buyer is strengthening negotiation power. Buyer can negotiate better term with the supplier due to secure payment guarantee. These were the advantages for the buyer. In case of seller, guaranteed payment from the issuing bank if document comply with LC terms. Second advantages is improved trust, builds confidence in transaction, especially for international trade. Liquidity options. Seller can discount the LC with their bank to receive the payment earlier. It was the overview for advantages of deferred LC for the buyer and for seller. In the other case, there are also disadvantages of deferred LC for buyer and for seller. For the buyer, bank charges may involve higher cost due to deferred payment and document verification fee. Second disadvantages is complex process requires strict compliance with LC terms to avoid the delays or disruptions. On the other hand, there are few disadvantages for seller like delayed cash flow. Payment is received after the deferred period, potentially affecting the working capital for the seller. Document discrepancies risk. Payment can be delayed or denied if the documents do not strictly comply with LC terms. Last is bank dependency relies on bank's credibility and efficiency. So this was the overview for disadvantages of deferred LC. Use cases industries common in industries with a long production cycle or high value goods, for example machinery and textiles. International trade is used to bridge the trust gap between buyer and sellers in cross border transactions. So this was the overview of deferred LC. We have discussed the deferred LC, its process, its advantages for buyer and seller, and disadvantages for buyer and seller. I hope the concept about the deferred LC would be very clear.